Take your seat at the velvet table, stack your premium chips, and pay extremely close attention to the dealer's hands, because the biggest bluff in the history of the high-stakes financial casino has just been officially called. Welcome to the VIP room, players. The flashing neon alert currently lighting up our private monitors reads, XRP holders, this signal just appeared, big move incoming. And if you are currently sweating over your cards because the spot price briefly tested $1.60 before experiencing a minor pullback, you are completely misreading the table dynamics. The amateur gamblers sitting out on the main casino floor are entirely focused on the short-term variance. They watch the intraday volatility, feel the agonizing psychological pressure of the shifting macroeconomic odds, and nervously contemplate folding their winning hands right before the final river card is dealt. But down here in the private syndicate rooms, we do not play the emotional swings of the crowd. We strictly play the mathematical probabilities and the undeniable tells of the market makers. We just witnessed a massive, undeniable signal flash across the global ledger. XRP has violently overtaken Binance Coin, reclaiming its rightful throne as the fourth largest digital asset by market capitalization with a staggering displacement. This is not a random run of good luck at the roulette wheel. This is a calculated, heavy-handed bet placed by the smartest money in the entire room. The house has been deliberately suppressing the odds, utilizing perpetual futures contracts to artificially manufacture a grueling, protracted bear market designed to break your spirit. They wanted you to believe your hand was completely dead. They wanted you to push your chair back, cash out your digital chips for absolute pennies on the dollar, and walk away from the table in sheer, unadulterated frustration. The moment a terrified retail player abandons their position, a highly sophisticated institutional shark silently scoops up those discarded chips from the felt to build their own monolithic stack. You have survived the most brutal cold streaks, enduring the absolute worst regulatory bad beats imaginable over the past few years. Do not let the manufactured silence of the dealer convince you to muck a generational winning hand when the pot odds are astronomical. The fundamental mathematics have permanently shifted in our favor, and the massive move everyone has been desperately waiting for is actively unfolding right in front of our eyes. The smart money is aggressively pushing their entire stack into the center of the table. Keep a perfect poker face and firmly hold your cards. Let us transition our focus away from the chaotic noise of the slot machines and forensically analyze the massive regulatory royal flush that was just slammed down on the center of the table. If you want to survive the greatest high-stakes game in modern financial history, you must completely ignore the superficial rumors whispered by the railbirds and strictly analyze the certified deck of cards. The mainstream media has been aggressively running a massive bluff, trying to convince the public that the government was permanently rigging the game against this specific asset. But the undeniable signal that just appeared completely shatters that illusion. On March the 17th, 2026, the United States Securities and Exchange Commission and the Commodity Futures Trading Commission issued a historic 68-page joint interpretation that officially explicitly names XRP as a digital commodity, entirely removing the suffocating label of an unregistered security. This is not a minor rule change at a local card club. This is the absolute highest gaming commission in the world, officially licensing the asset for unrestricted institutional play. The legacy banking cartels have been waiting for this exact moment, perfectly shielding their accumulation tactics behind a thick veil of manufactured regulatory uncertainty. They utilized the public fear of the SEC to drive the price down, forcing retail players to fold out of sheer terror, while they quietly hoarded the physical supply in their unregulated dark pool private rooms. Now that the legal clarity is absolutely, undeniably secured in black and white, the massive institutional whales no longer have to hide their massive bets. The impending passage of the Clarity Act is looming on the legislative horizon, promising to legally cement this commodity status into federal law and open the floodgates. You are witnessing the exact moment the House flipped the script. The institutions engineered the fear to buy your chips at a steep discount, and now they are holding the ultimate winning hand. The regulatory risk that terrified the amateur players has completely evaporated into thin air, leaving a clear, unobstructed path for massive, multi-billion-dollar capital inflows. When the trillion-dollar sovereign wealth funds finally realize the legal barriers have been entirely dismantled, they will aggressively buy into the pot, completely overwhelming the current algorithmic price suppression. Do not let them bluff you out of your seat right when the game becomes fully regulated and legitimized by the federal government. Push the heavy velvet curtains aside and step directly into the exclusive, invitation-only high roller suites, because the sheer scale of the bets currently being placed behind closed doors is exactly what the casino bosses are desperately trying to conceal from the general public. The amateur traders completely misunderstand the fundamental mechanics of this digital casino. They mistakenly believe that the financial valuation of this asset is solely dependent on retail tourists placing small bets on the brightly lit public exchanges based on erratic emotional sentiment. They have completely failed failed to anticipate the explosive stealth accumulation executed by the largest financial pit bosses on the planet. While the public monitors show a stagnant price hovering around $1.48, the monolithic financial titans commanding the heavily fortified exchange-traded funds have quietly swallowed an absolutely staggering stockpile of over $1.3 billion in physical cryptographic assets. How does a syndicate of that magnitude slide over $1 billion of pure concentrated fiat capital across the felt without violently triggering the public exchange alarms and launching the spot price out of the building? The answer lies in the highly secretive, completely unregulated backrooms known as over-the-counter dark pools. These massive sovereign asset managers are not walking onto the main casino floor to execute their multi-billion-dollar acquisition orders, because doing so would instantly tip their hand, detonate a massive price explosion, and permanently destroy their carefully calculated covert accumulation margins. They are silently hoarding the physical float inside these dark pool vaults, mathematically locking away the circulating supply before the massive macroeconomic tidal wave officially floods the casino and shatters the public exchanges forever. Furthermore, you must synthesize this brilliant dark pool strategy with the explosive scaling of Ripple's enterprise stablecoin infrastructure. The RLUSD network is actively acting as a massive, unstoppable chip-burning mechanism deeply embedded in the rules. Every single time a multinational corporation executes a massive cross-border settlement, a fractional percentage of the native token is automatically incinerated by the network code, permanently erasing it from the game. The house is systematically burning the remaining deck of cards while Wall Street desperately attempts to hoard the remaining physical chips inside their encrypted offline vaults. This is the exact mathematical formula for an unprecedented violent supply shock that perfectly aligns with the ultimate institutional betting strategy. Expand your surveillance cameras to encompass the entire international gambling syndicate, because the momentum triggering this massive infrastructural shift originates on a highly synchronized global scale that completely dwarfs the localized betting patterns happening within the domestic borders of the United States. A master casino operator understands that the total domination of a new financial gaming ecosystem requires the complete systemic integration of the old world sovereign high rollers, and the phenomenon actively unfolding right now accounts for this exact universal convergence to maintain absolute global liquidity. While the domestic civilian sector is completely mesmerized by the minor political bluffs in Washington, D.C., and the temporary agonizing price suppression on their mobile trading applications, our international pit bosses have intercepted critical paradigm-shifting wagers from the highest echelons of European and Asian financial syndicates. The new incredibly urgent intelligence that confirms the massive impending jackpot is an unprecedented European convergence designed to integrate directly with this new digital standard. We have verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MyCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking Leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP chips. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume that will absolutely overwhelm the current algorithmic suppression. Furthermore, we must factor in the recent Federal Reserve meeting and the shifting macroeconomic dot plot. The global interest rate climate is actively forcing central banks to rethink their entire strategy, pushing massive institutional capital directly toward decentralized liquidity pools. The sudden, violent jumps in trading activity you see are the market algorithms desperately attempting to price in this massive international adoption before the retail sector realizes the global perimeter has already been fully breached. The legacy fiat architecture is actively crumbling under its own inflationary debt spirals. The central banks are injecting massive waves of fresh chips to keep the game alive, and the digital replacement is fully operational. The international syndicate has officially taken their seats at the final table. Download the final chip management parameters directly into your personal betting strategy immediately, because identifying the sovereign manipulation and deeply analyzing the massive structural reality revealed by this newly formed regulatory signal is absolutely, entirely useless if you are permanently trapped at the table when the extreme volatility finally strikes. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the explosive utility growth of the RLUSD burning mechanism, the massive regulatory royal flush delivered by the SEC and CFTC, and the colossal international banking deployments successfully executed out of Europe and Japan. So what is the ultimate mathematical destination of this digital asset when the global liquidity cycle officially peaks, the universal betting alignment is finalized, and the algorithmic containment field is permanently shattered? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative odds makers at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific high-stakes cycle. To the uninitiated civilian gambler, currently psychologically traumatized by months of agonizing artificial suppression, an $8 projection sounds like an impossible, utopian jackpot designed merely to generate false hope and trap retail liquidity in a losing game. But to the elite poker professional, who understands the absolute mathematical certainty of a violently constricting physical supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a highly conservative operational waypoint on the journey to total structural dominance. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, completely emotionless framework. Human greed, impatience, and panic are the ultimate fatal vulnerabilities when attempting to walk away from the casino as a permanent winner. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a tactical cash out and sell exactly 33% of your holdings. This unemotional maneuver secures a complete, absolute recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic liquidity wave toward the $8 institutional target zone. Secure your private keys, trust the mathematical odds over the noise, and execute your cash-out strategy flawlessly.